Greetings people, welcome back. Buenos dias, y buenas tardes, y buenas noches, wherever you are in this world, hope you're doing all right. But I'm glad you're here, and you could have been on YouTube watching anything. You could have been watching a dog get a nice shape up at the barber's. Or you could have been watching a guy get the absolute slapped out of himself.
Stop playing. Stop playing.
But you're right here with me, and for that I'm grateful. As you could tell, I just got in from work, but still feeling kind of fresh, so I had this idea just to do a little continuation from the last video, show you what I really meant about buying shares where you spend your money. So yeah, thought we'd do something different, get outside and yeah, show you what I really mean. So every week I have to fill up my car and I pay about £70. So to buy a share in the petrol station just makes sense. I use Shell and their shares are currently £13.69 like as of the day of recording. And so every time I fill up, if I'm spending £70, I may as well spend another tenner and have a share. And also Shell pay dividends, which they pay out 4 times a year. And the dividend yield for Shell is 3.47%. So every time I fill up, I buy a share. So if I'm filling up every week, I'm roughly gonna have 52 shares at the end of the year. And I also fill up at BP, and I do the same thing. When I go to BP, I buy a share, and I usually buy it literally at the pump as soon as I've filled up and paid. So if you're ever sat behind a car thinking, well, why hasn't that guy pulled off? I'm waiting for the pump. It's probably me buying a share, so apologies. But yeah, how much are Shell shares? They're £2.78 at the moment, and I think anything under £3 for BP is good. So, but what I do with BP, because their shares are much cheaper than Shell, it's literally about 5 times cheaper. So when I go to BP, I buy 5 shares. When I go to Shell, I just buy 1. I just buy that on top of my fuel. And BP's dividend yield is 7.30%. So that's pretty good. So end of the year, I should have somewhere around 50 shares, and it'll be divided up depending on where I've been refueling. But that's just one of my suggestions of buying from where you spend your money. And some would disagree. Some would tell you don't put money into oil because everything's going electric and EV. And I fully agree with that. I've got money in EV, but you got to ask yourself at the same time, it's not going to be as quick as people think. 2 years, 3 years from now, we're still going to be using petrol and diesel cars. And the move to EV, oil's going to be needed. It's definitely going to be needed for aviation fuel. I know Shell have a big hand in that. I see them all the time at the airport. And also, you got to think to yourself, what are these billionaires in oil gonna do when EV takes over? You think they're just gonna say, all right, electric's here now, I guess we're done? No, they're not gonna do that. They're gonna be moving in the direction of green energy as well. They're already doing it. They're not too vocal about it, but they're doing it. And the way things are going with these electric charging stations, I really wouldn't be surprised if what we know as the petrol stations is gonna be the fast charging stations, where you can just pull in and get a quick charge and be on your way, just like you do with fuel. And so I wouldn't write out oil. I really wouldn't. Others would disagree, but I think it's safe to keep some money in oil. Plus, they pay a dividend 4 times a year. You're gonna get paid, so I'm still all for it. Maybe you want to reassess that at the end of the year or in a couple years' time, but for now, don't write out oil. And but this isn't financial advice. I'm not a financial advisor. And not only am I not, I'm not your financial advisor. I don't know you or your circumstances, so don't blindly listen to me. Do your due diligence like you should. But that's just what I'm doing. And I did it last year. It worked out well, especially while the prices were down because of the pandemic. And hopefully they go up this year, but not too much, because, you know, me personally, I like to buy while things are in the red. Getting the same product but for cheaper. So yeah, that's just one of my suggestions of spending money, or buying shares rather, where you spend your money regular. And I'm in a petrol station all the time. But anyway, on to the next place. Right, didn't quite make it up here yesterday. I was cutting it a bit fine. But where am I? Asda. Asda is the UK division of Walmart. Since recording this video, there's been some changes. I've actually been sat on a video for a few weeks because of full-time work and that, you know how it gets. Anyway, Asda is back in UK hands. Brothers Mohin and Zuba Issa, sorry if I've butchered your names, they have bought the majority of Asda from Walmart. Walmart only own a minority share now. The transaction values the UK grocer at 6.8 billion, only slightly more than the 6.7 billion Walmart paid for Asda in 1999. All other information in this video is still very relevant. I will still be purchasing 0.1% of a share of Walmart every time I shop at Asda. They're currently on the stock market for $137 and change as of the day of recording, and their dividend yield is 1.51%. Every time I go shopping, I buy 0.1% of a share. I just add that to my cost of shopping, and by that math, I should have about 5 shares at the end of the year, which I'll just keep adding to. But there's a few reasons why I buy shares in Walmart. They're a good growth company. When you look at them on a year's graph, they're steadily going up, although right now they're kind of consolidating, just trading sideways. They did have a bit of bad news in their Q4 reports, but along with some good news, so I'm still very happy with them. But they're very innovative. They're always trying to find ways to rival Amazon, even though Amazon's in a league of their own, personally, but they're trying, and that's the main thing. A lot of places ain't even trying. And I find also a good reason to buy them is just for diversification in your portfolio. You're going to have other sectors what you're heavily involved in, whether it's EV or big tech, blue chip, whatever you're into. But I find the supermarkets and the consumer staples, they kind of just stay steadily bubbling in the background. And it might be them that keeps your portfolio in the green when other sectors are down for the day or the week or whatever. So diversification alone is a good reason just to have them there. And again, it's just better to have your money in the market working for you rather than sat in the bank earning you nothing while they lend out your money and earn interest or invest it themselves. That's why when you go to the bank and you want to take out more than a few grand, you can't get access to your money straight away. They tell you to come back in a couple of days because they're investing it themselves or they've lent it out. So you may as well invest and make some money of your own. So yeah, that's really why I buy into Walmart. Like I said, like the way I do with petrol, I just buy a little bit as I'm actually shopping, so you don't even really notice the money you're spending. And yeah, that's why I do it. Right, quick bit of bonus footage for you and then we'll call it a day. Right, these are products that you probably all have at home, and there's one thing they all got in common. They are all a part of the Unilever brand. On all of them, you're going to find that U. A lot of adverts for these kind of products you're going to see on TV, and you're going to see that U pop up at the end of the commercials. So, again, it's about buying shares where you regularly spend your money. And, you know, you weren't even thinking about the products being a Unilever brand when you bought them. You just liked them for whatever reason. And at the moment, their shares are trading for about £39 and change. They're on the UK market. They also pay a healthy dividend. They are currently trading at a low at the moment. They are testing their support level for about the fifth time now, for about £39. But I think they're pretty stable. They'll always be all right. We're always going to need products like these. So it's just another thing to look at. I've shown you these three things. What were they? It was, Unilever, Asda, and an oil company, just because that's where I spend a lot of money. But you now can look at your life and see what you buy often. There's easy ones. I'm a heavy Apple customer. I've got, iPhones, iWatch, iMac, MacBook, iPad, the lot. If Apple make it, I buy it. So that's a no-brainer. Are you a Microsoft user? Look at that also. Both of those pay a dividend. So, the three products I showed you, it wasn't to say, go ahead and buy those, because once again, I'm not a financial advisor. It's just these are things that I buy regular, and it made sense to me. So look and see what makes sense to you, and do a bit of due diligence on them, make sure they're worth investing in, and go from there. Peace. Alright, thanks for watching this video to the end, truly appreciated. Remember, nothing I said constitutes as financial advice. Always do your due diligence before buying any stocks. And if you don't mind, please hit the subscribe button, the like button, and the notification bell. It will update you when I put up a new video. So look forward to more content coming, and until the next one, hasta pronto, muchas gracias y adios. Peace.